With us now is Dr. Olaf Groth. He is a global strategist, faculty at UC Berkeley Haas School of Business, and CEO of think tank Cambrian.ai. Good to see you again.
Good to see you too, Alan. Thanks for having me yet again.
Sure. Well, first, let's start. The Fed raising the interest rate, meaning, mortgages, credit cards, car loans, money's going to get more expensive to borrow. The Fed move to fight inflation. It might not be the only rate hike this year. How much of an impact does this have really on the average American?
Yeah, look, the Fed was trying to be measured here and calm the markets down by just going with a half a percentage point and saying, we're not going to raise it by 0.75 next time either. But I think the markets are realizing that while that is a good intention, we're still seeing a lot of upward pressure on inflation, whether it's oil prices or commodity prices due to the war in Ukraine, or whether it's the supply chain issues with China, or frankly, still increasing wage pressure because we're still seeing record numbers of, job switchers and open positions out there. And so the market is kind of expecting that there'll be further rate increases of whatever percentage. And so there's been a lot of volatility in the market around this. I think what we're going to have to look at here is that in the medium term, the increasing interest rates will make the US dollar more attractive for foreign investors. That means the US dollar will get more expensive. That means our exports are going to get more expensive. And so for everybody who is making things in Silicon Valley, there is some probability that the goods will become more expensive abroad. That may dampen demand somewhat for those exports. If you have loans with variable interest rates, those loans might become more expensive. Then your investors might look at that and say, well, look, if you're having trouble servicing those loans, maybe we should assess a risk premium, right? If you are invested in cryptocurrency, that has been correlated with the downward swings as well. And of course, as interest rates go up, now people who are looking to buy a home are also more careful now. So we may be seeing a slight dampening of the housing market, although there is so much pent-up demand that's probably going to be lagging. So all around, I think we're gonna see further increases and potential negative effects at first. But let's not forget that this is actually setting the stage for the next growth phase. Once we have brought inflation back down, I think we'll be much better able to harness the promise of the next phase of digital growth as well.
Hang on, let's hope so. I'm with you on that. All right, Netflix canceling some shows, trying to cut its cost because there's a shrinking subscriber base. How much of Netflix troubles are tied to this whole, the streaming world is changing so fast, a lot of competition. We're in the streaming business as well.
Yeah, I think, frankly, Alan, what we're seeing here is the end of the honeymoon for streaming, right? And yes, this was a double whammy on Netflix's part, right? Saying that in January that they would only bring in 2.5 million additional subscribers, then losing 200,000, and then saying the next quarter will yield a loss of 2.5 million or two more million, as it were. That really angered shareholders. But I think there is more of a pathology here for the streaming business at large, right? And let's look at that. So first of all, competition has intensified. There are now many offers out there. It's a bloody red ocean, and that makes competition much stiffer, possibly yielding lower margins. Then you also have, global growth slowing. So we're seeing subscriber growth in Latin America and in Asia receding as well. We're seeing greater price sensitivity on the part of consumers due to inflation, right? And then also, let's not forget, people are coming out of COVID and are rediscovering non-streaming entertainment services. So all of this is coming together, I think, yielding lower growth expectations for the foreseeable future.
Yeah, the pandemic certainly led to more screen time for a lot of folks. Apple suing a startup called, is it Rivos?
Rivos, yes. Rivos is another semiconductor startup that has been allegedly poaching, chip design talent from Apple. This is a cloaked startup that has been attracting, talent from the who's who of the chip industry, Qualcomm and Apple itself, of course, Intel, Marvell, and others. And so they have a star-studded cast there. But allegedly, with that star-studded cast came, trade secrets. We'll have to see whether that can be substantiated. But this could potentially boil up into a bit of a brawl because the federal government has elevated these kind of trade secret cases to the federal courts from state courts because trade secrets are so important for the U.S. economy. And so, look, I think this is sensitive and important from a number of angles. First of all, we're looking at the battle for the brain of digital devices, right? And now we have chips in everything from cars to drones to, of course, electronics, consumer electronics. Everything these days has microchips in it, and microchips are increasingly more powerful. They're more expensive to design, right? They're now systems on a chip that control every piece of smarts in your devices. And so they're used by these companies like Apple to drive value, to drive competitive advantage, but they're also very sensitive from a national security, national competitiveness angle. So this will get a lot more attention, I think, going forward.
Yeah, my son was telling me he's trying to rebuild his newest gaming computer, and one of the hardest things and expensive things is the video card. It's essential, but there's such a demand, and there's no supply.
That's right, and increasingly, this is also, has AI in it, right?
Mm-hmm.
And machine learning, and those chips are highly prized, high performing, and so yes, this is definitely a space to watch for more action.
I'll tell him to be patient. All right, Elon Musk says he's yeah, good luck with that, right?
Yeah, right.
All right, Musk has lined up $7 billion, got investors in his bid to buy Twitter. What's the latest in his plan for Twitter?
Well, look, he's saying that he doesn't really have a business plan for Twitter. And, the funny thing is, I actually believe that he doesn't. I'm sure that the people that he brought on board, like some of the private equity firms, are doing the numbers, right? But, people are saying, look, he's very mission driven and he's part of this very mission driven pack of new investors, right? If you look around, you'll see that shareholders at McKesson, for instance, docked the pay of executives that oversaw the company during the opioid pandemic. Carl Icahn, famous activist investor, went after McDonald's and Kroger for inhumane treatment of pigs and pay discrepancies between the genders. And so there's definitely a little bit of that because, obviously Elon Musk has said he's going after free speech as well and wants to see that flourish more. But I think fundamentally, the man is, somebody who brings a brilliant engineering mind to problems. And so he has said there's a number of problems to fix at Twitter, like the authenticity problem with the bots, like the advertising model. And so I think he's going after, critical path fixes in Twitter. And if he succeeds, the money will likely follow, right? And so stay tuned here. Incidentally, also, Alan, and this is something that maybe we'll be discussing more in future segments here, but he could do something really bold, and that is turn Twitter into a decentralized autonomous organization, a DAO, right? That is based on blockchain. He opens up the code base. He brings in tokenization, and he makes this sort of a true Web3 entity, which would be truly revolutionary, the first of its kind at this size, and would lead us squarely into the Web3 territory. So,
wow.
Who knows? We'll have to see. But stay tuned on that too.
Yeah, the vast frontier for him. All right, I'm going to let you go, but before I do, I just want you to know you went easy on me this time with cryptocurrency, but I was prepared. I went out and I bought the complete guide to cryptocurrency. I spent $13.99 in U.S. currency to learn everything I need to know about cryptocurrency. So I'm going to do my homework. I want to be a good student of yours, so maybe there'll be a quiz next time.
Fantastic. Yes. We'll see if you get that straight A, Alan.
Yeah.
Thank you.
Everything you need to know about cryptocurrency is in this magazine right here.
All right, my friend.
Take care. Dr. Olaf Groth, thank you so much.
Okay. Take care.
Bye-bye.